Hi everyone. Super excited to host Alon Gorbonos, general partner and founder of REVC. Thanks a lot for being on the show.
Thanks for having me, Meyer. It's very exciting and I'm happy to, have a conversation today.
It's my pleasure. Alon, take us back to your college days until this position. What would be your top three career highlights?
You know, it's funny. I would have never guessed that I would end up doing what I'm doing today when I went to college. But I think for me, probably a few highlights is after I actually graduated my master's at Duke here in the United States, I joined a big consulting company named McKinsey and Company. And working there for 5 years, I think definitely helped me kind of like excel my, in a way, research analysis ability to look at kind of like the market as a whole and being able both to go very 10,000 feet high and deep down and right into the trenches, so to speak. And I think that from there, transitioning into real estate, but on the traditional classic side. So that would be my second highlight, right? Basically becoming an owner operator or real estate investor was something very unique, which for me taught me a lot about the real estate market, the construction market that we'll talk about, but as a end user, as an operator, and not just as an investor nowadays. I think it's very, very critical to know what are you talking about, but not just to know it, but literally when you are building with your two hands, you understand all the difficulties and frustrations and understand the market better. I think that the third is just always was a big learner. And, I remember since I was in undergrad, kind of like was curious, was hungry to understand more and learn more. And I think this intersection of technology and real estate is something that I always was like fascinated about. There was not enough. And that's what led me launch REVC, which is kind of like a venture capital that solely look into real estate and tech.
Amazing. Looking back, what would be like the most difficult part in the whole journey?
So, it's funny. I spoke about it actually with one of my investors recently. So when back in my real estate days, right? So just to give you a background, I built a private equity fund. We own about, I would say, a few thousands of in residential units and commercial buildings, and it was in the hundreds of millions of dollars. But the interesting part that when you are underwriting a real estate deal, you always trying to focus on what can go wrong and kind of like look at the downside risk protection, right? You always making a very safe per se investment, because in real estate, people are not kind of like investing to lose their capital. On the contrary, it's considered one of the safest kind of like investments vehicles. And then when I switched gears and I went to venture capital, it's almost exactly the opposite, meaning you are underwriting your opportunities into kind of like lenses of, in a way, what's the best scenarios that can happen, and trying to ignore to some degree the hardship and in a way, the risk associated with it. I'm not saying that we're doing kind of like ignoring per se completely the risk, but it's a complete different mindset of going and looking at the upside and looking at the big vision versus kind of like at what's in stake and what do we have right now. And I think that for me personally took a few good years to kind of like tune my entire logic and my entire lenses into this new way of thinking, so to speak. And I'm still it's a continuous journey.
That's so interesting. How can one become an operator like as you were? What are the skills they have to learn if they are pretty new
In real estate or in as an operator in a startup founder?
in real estate?
So I think first and foremost is there is almost, I'll use an analogy. You can learn how to swim versus reading it in a book, right? You have to actually jump to the water and not drown, but this is how you learn. I think real estate is almost the same. If I look at myself, you could learn the theory behind it, but the best way to start is just by doing it. Now, of course, I'm not saying go tomorrow and buy $100 million project, but start small. Start kind of like with a very simple transaction, like a very small asset, something that financially you can either do yourself or do with friends. And I think that as an operator, the most important thing in real estate is to be in the weeds, to be in the details, to understand all the different dynamics, understand the tenant and the landlord and the people that work for you. And it's a people driven business, so kind of like really trying to get into the shoes of the stakeholder or the person that you are dealing with and understand what drives them and what's their motivation. I think once you manage to figure that out, your real estate journey is much faster. It's not just numbers. I think the biggest mistake is treating real estate as an Excel spreadsheet investment. It's never going to work.
What would be the like difference between the best real estate operator and an average?
Huh. I would say probably in real estate, a good operator is someone who doesn't undertake too much risk, which is a contradictor to the venture capital. It's real estate in the end of the day, it's a predefined set of rules that if you following the script or the playbook, it's very hard to fail. When I say fail, is to lose your entire investment, right? In real estate, in the end of the day, you can do either very well or you can do modestly. But if you follow the different kind of like guidelines of don't be over levered and don't take crazy investments that are taking a lot of time to stabilize them. And kind of like if you follow the different guidelines, it's relatively safe to assume that you'll do well. I think the people that excel are the people that also manage to build a very solid infrastructure and team to support them. It's very hard to do everything on your own. So when you are scaling, make sure that you have the right foundation rather than kind of like chasing your tails all day long. I think there is a misconception that real estate is a passive investment. It's not passive. It's passive because nobody counts their personal time they put into it, but it's a very much hands-on active investment. So the good investors, I think, are the ones that understand it day one and prepare and treat it as such.
Got it. Take us back to the first month of starting your fund. What were the thinking behind starting this? How did you form the team, co-founder, and everything?
Yeah. So when I started my venture fund in 2022, just to get you to the right time, I basically was kind of like getting out of my real estate operator path, which I was lucky enough to sell a big part of my portfolio. And it was also a very good years to sell. But interestingly enough, I was frustrated as a customer, as an end user, by the lack of technology and how antiquated this entire market is. So I decided to form my first fund called RE Angels. And the idea was to basically go and provide capital, but also provide support and guidance to early stage entrepreneurs in this real estate technology space. And when I say real estate technology, I mean in property technology, prop tech, construction technology, contech, and the intersection of the fintech and real estate. And I think that what drove me to do it is just by having a lot of organic conversations with founders, realizing that there is not enough support in that space. It's still, in my opinion, one of the most unrepresented verticals within venture, but yet the one with the biggest opportunity because real estate is the biggest asset class in GDP wise, no matter where you are in the world. Everybody needs to live under a roof. Everybody lives in a building. And it's fascinating to me how technology managed to penetrate almost every aspect of our life, while real estate is still probably the last standing. But that's going to change very, very fast. And hence why I decided to go all in. And nowadays, kind of like working out of my second fund, REVC, which kind of like we want to support and continue this great trajectory of, changing real estate one startup at a time.
Yeah. I like as a founder, I often relate the fundraising part of the fund the VC goes through. And if you can share some light, like how is that fundraising different than a founder raising fund for the startup? How does it look like?
It's a great question. It's funny. In some ways, it's even similar. And I think fundraising, a friend of mine actually from McKinsey told me a few months ago, we met in Miami, and he told me, fundraising, it's such a humbling experience. And I agree. I think it's a very interesting path because I think as a entrepreneur and as a GP in a fund, it teaches you about understanding that things are, if you really believe in them, you need to work very hard for them, right? And people are challenging you, they like exactly as me as an investor in my VC. When I meet with entrepreneurs, I'm asking tough questions and I want to get into kind of like the bottom of things and kind of like realize what's under the hood. Same goes when I meet potential LPs and they want to understand what's different in our fund from other similar funds and these differentiation points, and having all the answers ready. I think it's very, very important. I think in a fund, it's a bit different because in the end of the day, you are going fundraising for sort of like a strategy and not a specific solution, right? You're kind of like going to LPs and pitching them about kind of like a thesis that's going to be multi-year strategy. In our case, kind of like we are pitching that our ability to get the best deals in real estate tech versus an entrepreneur that says, hey, there is a problem that I see in the market and my product, my service will be the solution for that specific problem. So I think it's just kind of like a different perspective. I think also, it's a different horizon a bit between a fund and a startup. And it's kind of like in the end of the day, it's also, I think, a bit of a different audience, right? Like the people who are investing in startups are not necessarily the people who are investing in the fund managers, if that makes sense.
Were there any surprises in the whole fundraising? So like you thought you planned that, but it didn't turn out and it was different.
Of course. I would say there is always surprises and nothing really goes as you plan and you need to adapt, so to speak, right? I think that interestingly enough is when you go and you fundraise for a fund or set yourself almost like and I would say a first list of potential LPs. And interestingly enough, as the journey goes, you actually discover that your story more suitable to a different audience and you need to pivot. It's almost as an entrepreneur, right? You go with a predefined idea that your path or your company should do X, and then even after you fundraise, you realize, well, it's great that I thought X. Actually, I need to go and do Y. For me as well, it's when we started working on our VC raise, the second fund, we were going after mainly the same subset of LPs as our first fund, which is real estate professionals. But we realized that actually we have a lot of appetite also from people who are not necessarily day in, day out real estate professionals, more financial players, and they are interested to get that exposure. So we widen a bit kind of like our net and kind of like went after audiences that naturally are not the ones that would be suited for fund one, but they are very hungry and they're very interested and they're very curious and they're seeing the big opportunity that real estate technology provides.
In like for the founder fundraising, I often discuss with other colleagues, there are some tricks which makes fundraising effective. That if you want to raise from a fund, if one of the portfolio founder does a recommendation, there's high chances you get a meeting with the partner, or if the investor is going to a conference, you can do an elevator pitch. So in terms of LPs, like networking is crucial, but like there are so many other layers on how to get effective fundraise. So any tips on that?
Yeah, I think, for whether of your audiences who's thinking about becoming a GP and raising a venture fund, I think one of the tricks that I learned is that your best ambassador is an existing LP or existing investor. Going through your current network is probably the strongest. And I think that if you are smart enough to leverage it correctly and, make sure that whoever is your previous investor helping you and introducing you to their, network is giving you almost like an advantage, so to speak. I think second is important is, and I think it's similar also to an entrepreneur, is to be able to follow up conversation, but I would say in a polite way, not in a annoying way, so to speak. People are busy. People have other things going on in their life, and it's not only about your fund or your startups. So staying top of mind is very important. So being organized, being diligent, doing the homework, and understanding why investing in your venture fund is, in my opinion, full for the LPs, not just from an alpha or financial return. There's also a lot of strategic positioning that you can provide to your customer set and your LPs. I think being minded on that can help you a lot.
How do you plan? Like there are every like couple of years there are hot trends. Okay, there was AI earlier, blockchain, and there's so many moving parts. So having a thesis is also challenging. Yeah.
Yeah. It's a great question. I think that at least when I'm thinking about RAVC, part of our strength is being very connected to the real estate field. And I think that in many ways, we form our thesis by constantly talking to our LPs and constantly being there and understanding kind of like what are the problems and what are kind of like the opportunities that are exist today, not 10 years from now, not 10 years ago. And I think that, in my opinion, everyone in venture has to keep a very continuous dialogue with their markets and their LPs and understanding what to go. Like, for example, one of our interesting theses that we are going out after in 2026 is tech-enabled services. So basically taking legacy trades and services and with technology, managing to basically consolidate them and provide efficiencies by boosting the operations. Like an example, in our first fund, we invested in PestShare, which does it in pest control, and Daisy, which in property management, and in Fairies in home cleaning. And I think real estate, in my opinion, has a lot of those kind of like different trades and different kind of like services that can be disrupted one trade at a time. And I think that getting into what's really interesting is only available if you are constantly talking to operators and you constantly asking them proactively, what would have made your life better? Where would you like to save more money? Kind of like, where do you feel technology is not serving you right? And not being afraid to ask that question and not being afraid to brainstorm with your LPs. I'll give you another example. One of our current LPs has a very big multifamily operation in the billions of dollars. And I asked them, did you ever thought carefully about your tech stack? And we analyzed it together and we discovered, I kid you not, they have more than 65 different technology provider solutions. And this is a real estate operation. So think about just mapping them all out and being able to understand what affects what and what's really needed and what doesn't need it. I think that's an exercise that I don't know how many of my peers doing it with their LPs, but I think for me, maybe back from being in McKinsey is very informative and very interesting because while going through that exercise, I can uncover a lot of opportunities and I can understand what works and what doesn't work. And to your question, form or have a better informed thesis when I approach my investments.
This is so unique and insightful. And I often see like Y Combinator and A16Z make a list of 2026 call for ideas. So if I were to ask you like your call for ideas, what would some of those be?
I'll take my crystal ball for a second and let you know what do I see. But no, it's a good question. I think that I'm going to talk more in themes rather than the specific idea, right? Because if I had a specific idea, probably I would have already formed a company and do it, but I don't. So no newsflash here. I think that one is obviously leveraging AI, but let's talk about it for a second, right? I think AI in real estate come to a point where expectations are that it's providing an ability to automate processes and not just provide an insight. I think I'll be looking into AI startups that are able to potentially replace a work stream that is currently done by someone in the org chart, right? Think about it in 2026. I think that the future org chart of a real estate organization will have a hybrid of real people and agents, and they will be working together. So it's almost like going into kind of like the next step of utilizing agents and AI. And I'll be looking into those ideas or companies that are able to provide it. Real meaningful productivity gains and real, ability to replace different work streams in a real estate organization. I think that's definitely one. The second, I talked about it before, big fan of tech-enabled services and virtual roll-ups. So every, in my opinion, idea that does it in a very smart way. And, you can do it in roofing, in HVAC, you can do it and the list go long, landscaping and you name it. There is a lot of opportunity. The trick is to do it correctly. I think there is a very fascinating way to go over that. I think probably the last one is still was a case before and the case now is basically looking in the entire back office, and looking at the transaction as a whole. So from how you search title and how you look into, the reconciliations and the accounting and everything that is, in my opinion, is a subset of rules that can just go and be automized. That's something that is intriguing to me as a real estate tech investor, so to speak.
This has so many great ideas, and definitely like it opened my mind. There are so many different aspect of real estate construction. When you receive deals over email or founders pitching, do you see an area where there's like oversaturation and area that is like undersaturated?
Yeah, so I think it's funny you ask. I was actually talking about it today, earlier this morning. I think there is almost becoming, I wouldn't say saturated, but I would say we see a lot of those in the underwriting of deals. I see there is like a lot of startups that are pitching almost the same thing with a different flavor of we developed an AI tools that takes an OM and or does all your underwriting in an automated way and find you deals. I think that it's almost like becoming too much. And I think the idea is to figure out how you approach it in a different way and not just by saying we don't need to do underwriting anymore. I actually, in a school of thought, that underwriting will was and will be need to be done by a human being as someone who did a lot of underwriting itself. Now, I think that yes, AI should boost your productivity and give you superpowers to do it faster, but it cannot replace a human being. Period. That's my humble opinion. Now, I think that another area in real estate and in construction, actually tech that I see a lot is point solutions that provide you dashboards. I think you have so many dashboards. I think the industry is tired by the dashboard. I think people need real business solutions that boost your productivity and help your bottom line, not another fancy screen to look at. So if I were actually an entrepreneur, I'll be thinking about how I consolidate all the information, consolidate all the different dashboards into one comprehensive solution or tool that reduces the time it takes right now to manage a job site, to manage a process or procurement in the construction. It's like take the most, in my opinion, challenging, complex processes and try to automate them. And that's what going to make someone to win.
So those two were on the oversaturated side.
Yeah.
What about undersaturated or like with less competition or less ideas? But
Yeah. In the construction space or in general in real estate tech.
yeah, like
So I would say, I don't know if it's undersaturated, but I would love to see more ideas and solution into, in my opinion, how the entire procurement of the real estate is being done. I think right now it's a bit of a still of a old school that you are basically relying a lot on systems that are at the point of purchase or with your vendor. And I think it needs to be more done in-house. So I think that could be a very interesting one. We looked at a few procurement startups, but we haven't managed to find something that does it very well. And I think, you see it in other industries, supply chain and logistics, where they're very advanced. And in real estate, for some reason, it hasn't caught up yet. But I think this is a big opportunity. I think another one is we don't, in my opinion, leverage enough the data that we have from the visual, meaning there is a lot of cameras and there is a lot of, if it's an existing properties like CCTVs, or if you're in a construction site, almost I think every construction worker has a phone with a camera. And I think that as in the technology can do a better job to utilize that kind of like assets in the field to save time of inspections and to basically do a better job of kind of like utilizing that data to inform better decisions. So I think that's, if you'll ask me, something that I would be excited to look at. And I don't think we're doing good enough job. So how many people are being sent into job sites and properties to inspect something that in 2026 they shouldn't do? So that's something that comes pretty fast as an opportunity in my mind.
yeah, like food for thoughts for people building. You receive a lot of pitch decks, emails for founders raising fund. what are the patterns where, okay, you won't even open the email or won't even reply to book a call with the founder to listen to the pitch? What are the mistakes, patterns?
Well, I would say first, we really try in REVC to get to every person that is trying to get to us. I think that it's just being a nice guy, right? It's kind of like that's what you'd expect. Sometimes things are falling between, so apologize to anyone who's listening. It's not out of bad intention. But obviously, as everything in life, I think a good thing if you can come in front of us with already sort of an introduction from either one of our investors or our founders. Kind of like a personal introduction always goes far more than a cold outreach. I think the second one is obviously I would encourage people to do their homework and see what we're investing in. So to your point, yes, sometimes people are reaching out to us and they are trying to pitch opportunities that not even in real estate tech. So I would say whatever individual sent me that email probably didn't do the bare minimum of going to our website and seeing that we're not investing in pharma and we're not investing in spirits and we don't invest in computers and AI and the list goes long and long and long. And I think that, it's important to have a very solid deck, and have a story and see that you put your mind and heart into it. And I kind of like want to tie to your previous question, right? When we are fundraising as fund managers, we went through the process of kind of like working on our story and working on our thesis and working on our deck to our investors. And it took us a lot of time to craft kind of like a very nicely designed and well kind of like told story. It's very easy today fall in the trap of I'm going to ask ChatGPT to put something together and spit out it on a few slides. And you can see it from miles away as a professional investor. So if you want someone to really devote time and respect your time, respect also their time by really spending the time and bringing something that is looked like it was well done and well crafted, and I think that creates from the get-go a very good starting point where both sides are excited, so to speak, right? So hopefully that resonates with you as well.
I see. Is there a particular revenue number which would be a sweet spot for people to reach out to you to invest? Like,
Yeah, that's a great question. I think we usually like to see the founders already have some product market fit, an initial MVP. So I would say hundreds of thousands of dollars in ARR. It's almost a must nowadays. I think we live in a very exciting time where it's very easy to create MVPs. You don't need a lot of budgets. You literally go to Lovable or Base 44 or other tools, write a prompt, and you have a tool, right? So go and test it in the market. I think real estate is one of those markets that is very easy to understand if something works or doesn't work very fast because people will be either paying you or not paying you. There is not a lot of exploration here. So to your question, yes, I would love to see a few hundreds of thousands. And then I think where it's comfortable for us to engage as an investor is we ask ourselves the question, can it scale and can it scale fast in the relative sub-market of real estate, so to speak?
in in this AI era, we sometimes hear stories of a startup went from 0 to 10 million ARR in 9 months, or like crazy revenue number. Do you think is it possible in real estate to have such crazy growth?
Yeah, I think it's everywhere, and that's what I'm really excited as an investor. And kind of like people sometimes ask you, "What are you doing? What you're doing?" And not going back investing in real estate because I think we are now entering a very interesting time where you don't need a lot of kind of like resources to grow fast. It's almost like the paradigm, maybe 10 years ago is like I'm going with a deck to a VC and then I get $5 million, and then I'm going from 0 to $1 million, and then I'm going raising my A, getting another 10 and getting to 5 million. I think all that is shifting. It's like right now, go and bootstrap. You don't even need to take funding. And by the way, I'm encouraging entrepreneurs not to take funding in the beginning because you're selling a lot of piece of your equity. And for what? It's kind of like you can today in a very lean way grow very, very fast. And one example is we have a portfolio company named Unity AI. They grew very, very, very tremendously without any funding. Basically, they bootstrap until they raise their seed round. I think when you're raising your seed round, then you don't need those big checks anymore. Like a few millions could be good for you in order even to get to the $3, $5 million mark. I think that even as venture investors, we are need to understand that the rounds, in my opinion, will become smaller. And I think it will demand people to be more agile. And I think you will see also on the other end, companies getting into meaningful ARRs that startups will start being acquired in much earlier stages. Meaning it used to be that to get to an M&A, you have to go through all the alphabet sequence. And maybe you're lucky if somewhere in the E letter, you're starting to get a buyout opportunities or sell opportunities. I think today's, and the data actually shows it that, in 25, there was a big spike in M&A activity in real estate tech. And I think that you'll see that startups already after their A are candidates to be acquired by either the legacy real estate businesses or the real estate technology publicly traded companies. And things will start moving much, much faster, in my opinion.
It's very interesting insight. I want to wrap up the interview with a rapid fire. You'll have less than 5 seconds to answer, and you got to keep it super brief.
Sounds good.
Okay.
Ready
What's your
when you are.
favorite rest? What's your favorite restaurant?
Peter Luger in my neighborhood in Williamsburg, Brooklyn.
Your role model?
Wow. I think Warren Buffett.
3 words your best friend would describe you as.
Fun, honest, exciting.
Any city or country which is in your travel bucket list?
Yes, Tokyo, Japan. Never been. I'm dying to go.
Your favorite movie?
Rocky. One, two, three.
Any book which made a big impact in your life?
Hmm. It's a good question. I'm going off on the 5 seconds, but I would say the tipping point of Maxwell Gladwell.
Is it- Anything which we didn't cover in this interview and you'd like to end on that closing note?
You know, I'm very bullish and excited about real estate tech. I think people should look more into it. We haven't touched about the industry as a whole, but I think it's growing extremely fast. There is a lot of capital flowing in. If I were young and if I were now kind of like thinking about where should I go next, I encourage every person listening to your podcast to look into this field. I think that will be basically in a few years the same effect as was in the fintech industry 30 years ago, where the entire financial markets were disrupted. People will be telling the stories. And I think now it's the time to go in and start and doing it when there is less competition.
God. I have one more question. It just made me think, like,
Please.
what would be like top real estate, top 3 real estate conference you highly recommend and go to market tips?
So when we say real estate, just to make sure clarify, we're talking about real estate technology. So I think the first one I would recommend is a Blueprint in Vegas. It's happening in September. It's a very great, well-attended conference. I think one of the tips is obviously, I think, register sooner than later, and they are providing you with a good list of all the attendees. So do your homework and you can set meetings well in advance. I think the second one will be Cretech happening thereafter in the year. So also in October in New York City. So different side of the United States, but I think this brings a good mix of crowd and same. I think it's kind of like all the women who are getting into those conferences and you can do a very good job networking and meeting relevant people or stakeholders that you need. I think the third one, probably I would say Optech. It's a very good one and I would recommend people to go and enjoy. And I think the tips are the same for all. Do your homework. Don't just go and expect everybody is waiting for you because probably there's thousands of people. It's very, very hard.
Everyone is fighting for the meeting. This is an amazing pod. Thanks a lot, Alon, for being on the show.
Of course. Thank you for having me.